Hey traders, it's Gregor here. I hope you have a great day. Again, I will give you a free update on some of the markets that I've been covering lately on our Twitter page. As we can see today, the US dollar, especially dollar index, is breaking to the downside, and at the same time we see stocks moving higher after the US has been closed yesterday. We are seeing gaps higher on the cash market, but still we are seeing potential resistance at the near-term levels, so we just have to be aware of potential risk off. Okay, and the reason why we could be moving into some very strong resistance here is because I can see that put call ratio is moving into some extreme readings. Here above I have the S&P 500 chart, which is where the price is at 3000 level, its psychological level around 61.8%, and also notice that we are here at consolidation here back from March and back from March and February. At the bottom I have the put call ratio. Okay, actually it's an inverted chart. Okay, so because of easier understanding and reading, or whenever you compare this to the S&P 500. So it means that if you see the readings here at the upper extremes, it means the markets are buying a lot of calls, and the markets are buying a lot of calls. It means that investors, traders believes that the price will rise in the future. Okay, so if this is moving into some extreme readings, well, we can assume that maybe this current bullish phase that is going on can be in some late stages, because markets will always move from pessimism to optimism, right? So if we are at some very extreme reading of optimism, well, we can assume that maybe there will be a pullback. I'm not saying that we will see a pullback, I'm just saying that we should be aware of potential drop. This should not surprise us, because nothing moves in a straight line after all. So here in the middle I have also the moving average of this put call ratio, or I should better say call put ratio, because it's inverted, right? So as you can see, we are here at the top of these readings. It means that we could be finishing this current cycle. Okay, there are also a lot of traders that want to step into this bullish trade. They are realizing that after all, in March maybe stock market bottom, so they will try to ride this trend. But I think that it's a little bit late, and it's definitely much better to wait on solid pullback here. Okay, also if we take a look on DAX, trying to merge those two analysis with the US stock market, so you will actually see that here we are also moving into this March 09 gap. Okay, it's the date when actually all of the stock markets crashed 2 months back. Okay, and we are now trying to fill this gap. It means that maybe this gap, since we retraced the whole coronavirus decline, it means that maybe we'll now again slow down. If we'll take a look closely here on the 4-hour chart, this is my primary count. I can actually count 5 waves up here. Waves 1, 2, you have a extended wave 3, you have a wave 4, very nice support here at the former wave 4, and now you have a 5th wave. And looking at the intraday chart, also here you have 5 subwaves up within wave 5. Okay, right into this March 09 gap potential resistance. So again, I would not be surprised that we just slow down here. Maybe we see a deeper pullback, maybe just a temporary pullback, but I think that price is definitely very high here and could easily come to the downside. When it comes to trading, it's a little bit tricky. I would never going to short the market here, okay, because after all it's still an uptrend. But on the other hand, I would not be looking for any new buying opportunities either, because the price is very high. So I think that the best scenario would be that you see a pullback and then maybe trying to ride this trend from lower prices. Now let's take a look also on dollar index. Now, as I said, dollar index is breaking to the downside, is trying to break to the downside. We are here at the triangle trend line, potential support, but because I see here very strong drop and now consolidation, well, notice that here in this consolidation I can count 5 subwaves. A, B, C, D, and E. And if we can break this trend line today, by confirmed of course by daily close price below this trend line, below wave D, then I would be looking for much lower wave C, probably towards 61.8%. This would be my minimum objection. If that would happen, then of course cable, which I highlighted already last week, I think could see more upside. We have seen a very nice breakout here, okay, after this reversal from below 4 wave supports here. This reversal was made by 5 waves, followed by an overlapping decline, and today we have seen a very nice massive move to the upside. We are here, however, at a 100% equality level compared to the first leg. Always very important level for potential at least short-term resistance, but after all you still need 5 waves up for this cycle to be complete. So for now I think that this market still, cable remains in bullish phase as long as we are, let's say, trading above 1.2250. If we see a move below that level, then of course the wave count, the whole wave structure could become a little bit tricky, but for now it looks like it could go much higher, especially if dollar index will see this breakout. Now let's take a look also on crude oil. Now crude oil is also on the rise. We have seen a very nice bounce here from April lows, and looks like that we have here impulsive qualities. Okay, so I think that there will be more upside coming. The only question is when we get a pullback. Well, I always think that the traders, investors should watch this former fourth wave swing resistance levels. Okay, they can cause at least temporary pullbacks. So if we think that this is an impulsive rise, then maybe we could slow around $35 per barrel. It's a July contract here, so just be aware of potential ABC formation, and then more upside could follow from a lower prices. There's also of course a chance that this was wave 1. Let me just hide this. Okay, that this is wave 1, this is wave 2. You are now in a wave end of a wave 3. This was wave 4, and you will see a wave 5. Well, even if this count should be the right labeling, of course it's a valid interpretation, but still you would expect a 3-wave retracement, I assume, and then more upside. So if that would be the case, and if we see maybe a sharp drop, okay, back towards 31 or $30 per barrel, then the real support, interesting, could be here at this swing high. Okay, generally speaking, this is the support and this is the support. Okay, so whenever we get a pullback, I think that from there we could resume back to the upside. And where we could go, well, I see this merge, it was in March 09, March 06 gap open. Okay, and obviously I'm looking for this gap to be filled, but ideally after this pullback. So we'll see how this unfolds, but I really think that more upside could be coming here after setback. Traders, thank you very much for your attention. I hope that you enjoyed this video. Keep in mind that we have still 50% off available for new members and returning members, and there are only 3 days left. So if you are interested, make sure to visit our website ew-forecast.com and sign up and check our charts. If you have any questions, make sure to send us an email or contact us on Twitter. Okay, traders, have a good trading week. Bye.